Well, hello. Welcome to today's Trade Tracker. This is the weekend update edition. Today is Sunday evening. It's December 14th, 4:44 p.m. Central Standard Time. What I'm going to do today is just kind of pick up where we left off last week. We were talking some of the trends and where to position ourselves best for the most high probability trade as we get into more of the short-term trading, which I'll be talking about during the weekday trade tracker updates. I'll be starting those right after the first of the year. I'll be opening this up to everybody who wants to be part of the Apex Traders Club, and that'll begin right after the first of the year. But in the meantime, just kind of want to give you a kind of a brief overview as far as what's going on, and then we'll wrap up towards the end of this video with one of our day trades we had on Friday, just to give you an idea of how this automated strategy works out. Okay, excuse me. As you recall, we were talking about these trend channels here, going back quite a few years, going back to right around year 2019. As you can see, the market was trading in these channels, and during, as you look at the support and the resistance, you can see it was bouncing between these channels. And then as it went down to the lower channels, obviously, as we go down to a lower channel, the slope of the degree reduces. So even though the NASDAQ is obviously going up here for, a number of years, it has been dropping down between these channels, which is a little bit of a sign of weakness. And we just need to be a little careful. As of right now, you can see we're up here. We're in channel 7. This 8th channel was formed when Trump announced those tariffs. That's down here. And then we bounce, we're right back into this channel here. So you can see, once we drop down to these channels, the market, stopped trading within those channels. Okay. So now we're up here. And then if and when we drop down, start trading within this channel, most likely this is going to be the resistance, the top, and this will be the support for quite some time. We do have an all-time high here that we talked about last week. We were approaching it, and typically whenever we get near a market top, and I'm certainly not predicting a market top or forecasting that, but what I am saying, which I mentioned the last video, is the setup is there. Of course, the market can do anything. All we can do as traders is put our side on the proper side, the higher probability of where the move is most likely to go. And as we talked about yesterday, as we talked about last week, that was the short side. Okay. And so the market here is struggling to hit this all-time high. Obviously, if it does hit it and goes above it, we have to change our approach, and then obviously be going more towards the long positions. But right now, the highest probability is definitely to the short side. So as we trade our smaller term time frames, we have the 1 minute chart and some other ones that we trade much smaller time frame. The higher probability trade is going to definitely be to the short side. Now, it's not to say obviously a long trade can't work out, right? Anything can happen. We're talking about probabilities and positioning yourself where the probabilities are the highest. And right now, it's definitely to the short side there. All right. Let me go over here to next chart here. I want to show you. We talked about this one briefly last week as well. This is the 200-day moving average on our 42 momentum bar chart. Just a quick explanation. These momentum charts take time out of the equation. I really like bar charts because it removes the element of time. It's just strictly price and momentum, which is really what we want to look at as traders. There's certainly cycles when it comes to trading. There's patterns. And not that we're trying to ever predict a pattern, or we don't ever want to predict where we think the market's going. That's not how we trade. What we do is we just analyze where we're at this point in time. What is the market doing right now, and where should we be at this point in time as far as long or short? Because if as traders, we can make money going when the market goes up, or if it goes down, as long as we position ourselves accordingly. Okay. So right here, those white dotted lines represents 500 points above the 200 period moving average, which is that little like aqua line there. That's the tip of the or the peak of the 500 points moved up from that 200 period moving average. Same thing over here. As you can tell with the Nasdaq, when it gets right around 500 points above this 200 period moving average, it's kind of like a rubber band. It's a little bit overstretched and it wants to come back a little bit. So, and that's exactly what we saw here. Right over here, came back a little bit, pulled down here, and then what we saw as the market started losing momentum, as we talked about last week. Here, of course, the price was right near the top of that bar, right near the peak of the 500 points up. And here it started moving. It's about halfway, right? And then it went down to like the lower third, all right? And then the momentum, and we anticipated was going to start dropping and be lower. And this is how we verify and make sure that we're continually on the right side of the trade. And that's what happened here. This is the 200 period moving average. Like I said, that red line. And then what happened last week, between last weekend and today, was all this here. The market started dropping down here, and now right here, of course, this is 500 points above the 200 period moving average, and now the price is not even anywhere above it, and now it's below it. And also something else, this red here just exemplifies that we have some strong momentum starting. As you can see, if you look at the red, this is my proprietary fusion indicator, which I can make available to you if you like. You can see, little bursts of red down here, but we have quite a bit. It started accelerating here, and it really started accelerating here, which means the downside momentum is building. Can it change? Of course it can change. Like I said, everything can change at any point in time, but we want to make sure that we're on the higher probability side, and we also always put our stop losses in just to protect in case we are incorrect. And I'll talk about that near the end when we talk about the 1 minute chart. And here we have a moving average crossover. This is another. It's like when you're a market technician and we're looking at these charts, there isn't one thing we look at. We look at a combination of things all kind of happening together. It's like a pie, right? When all the pieces start lining up, it shows as everything's starting to move in the right direction. So here we have, as you can see, the red 200 period moving average dropped below the 500 period moving average. And a lot of times this acts as support. I mean, you can see right here, right, that thing is support, and then the support's giving away, and now it just broke right through. So that's definitely a sign of weakness here. And with this purple line here, that 500 period above the 200 period, it's an additional sign of weakness. So as you can see, it's just obvious here that we're in more of a down move here, and things are moving more towards the downside here. And then we talked about this chart also. Oh, no, this one we didn't talk about. I'm just going to show this one also. This is the 144 tick. This is a little bit longer term than the 42. And as you can see here, let me just give you what we're looking at. This is going back to November 21st. Had a little pop in the market, right? And then right when this is last week would have been the 7th, which is, let's see, right here is December 7th. And right there, when we were talking about, we're seeing some potential setup to go to the short side, which we talked pretty much in depth last week. And due to the probability, not that we predicted this drop, but we just placed ourselves on the right side of the higher probability, which is down. That's all that we're doing. And that's how it played out. Once again, we have a moving average crossover here where the 200 now is below the 500 on our higher time frame. So you see how these pieces of the pie, it's all kind of adding up. And then we talked about this also. We had our channel going up here, right? To give an idea what we're looking at here. This is July 31st, that peak right there. The all-time high was October 29th, 2025 right here. And then ever since then, the market was channeling down except for this aberration here. What happened, there were some news events that came out during this period of time. And what's interesting is this is where where I have it circled. That was last weekend. We had this. I did the same trade tracker update on December 7th a week ago, and we talked about how the probability is to the downside. Now, why would I say that? Well, based on everything I just said here previously, in addition, I mentioned how there's a lot of resistance up here right near the peak scale, that trading activity. It's like a tug of war with the buyers and the sellers, and it would have been very, very difficult for this price to continue through there after the low here, which was 24,160. Um, and then now here, this is 26,165. So we're talking like roughly 2,000 points of basically a straight move up here of 2,000 points. And that's a very, very large move because the average range, the Nasdaq is usually around 450, 500 recently. So I mean that's like four and a half days or so of a straight sprint up, which is highly unusual. But it did happen, and for it to go another day or two above here would have been extremely unusual. So the probability is that it's going to most likely turn here because it tried to go through that resistance line a number of times. You can see when it dropped down here, we have that little red spike up there. Price hit it there. It came down. Tried to come up here a little bit. That's twice came down, three times, and then over here four times, and then this time five times. So five different times to try to go up there and drop. As of last week, we were approaching the fourth, and it just looked like a very solid, obviously, resistance there, right? With that now that activity there, couldn't get through those other, four other times tried to get through here, 2,000 point move up, and the probability was just based on that to the downside, based on the other time frames too, everything that we were looking at. I want to bring something to your attention also. You might notice these numbers here are a little bit different than last week, even though the pattern looks exactly the same, which it is, the numbers are different. What happened in the futures? What we have is called a rollover. Okay, and just to keep it very simple, and we get into our seminars and our daily classes and the coaching and all the webinars I have during the week. Once I get this kicked off here after the first of the year, I'll go into detail on all this, but very, very, very simple. When we're trading the futures, it's just a 3 month contract, and then it rolls over to another 3 months. So all we're doing is buying and selling a price, basically. And it's just a version of the Nasdaq index. Okay, but keep it really simple. The December 25 contract is what we had last week, and it rolled over this past week. So now we have the March contract. This happens four times a year. So the price, as you can see, whatever price was over here, the day it rolls over, the price changes, okay? But the pattern stays exactly the same. Like I have down here, the contract prices adjust every quarter. That's called a rollover. But the previous market structure and the behavior stays exactly the same. So it just kind of recycles every 3 months, and just the numbers change. And it's really no big deal because we're just changing. We're the futures traders. We're trading structure. We're trading the patterns, and the numbers just change. So we just adjust for that. So it's nothing major. They're not getting more why that happens and all that in other classes. But keep in mind, everything here is as it should be. So as you can see, that, and plus as I mentioned, we have this channel up here, and then of course this channel down here, and that's the big early. I don't want to call it, I guess it's bearish, but it's a bearish signal here just after this huge bull run. So, and you can see, of course, price is respecting this higher channel, busted through because of the news. So as of right now, the higher probability is still to the downside. We're below this blue line, which is the 50 period moving average. Red is negative. That means whenever you see these fusion lines, these are candles, my proprietary candle system. Red is negative momentum. Green is positive momentum. And whenever you see any gray candles, that's a neutral. Okay. So right now we're in red on our 144 tick chart here. Okay. So very, very interesting. And then, like I said, we're also below the 50 period moving average. Excuse me. So this is not good if you want to be long. That's why we need to be positioned here to be short. And also we have our stop losses if the market does whip the other way. But that's the way we need to be positioned. So from last week to this week, it worked out pretty well, right? Last week, price was right around here, right around 26,050 or so. And right now it's at 25, 450. So what's that, about 600 points or so, 600 points it dropped since last week. So we're on the right side with some really good trades last week. Um, Definitely more winners than losers, but like anything else, you're going to have some losers there too. But it was a very, very good week for us. We'll get into that during our weekly sessions when we do that. Okay, then I want to talk about the VIX, the volatility index. I don't want to get too much into this chart either, but very, very simply, all VIX is a volatility index. Okay, and this is measuring the volatility. I mean, is volatility basically is price moving around a lot? Like, is it really jumping all over the place? Or and they're really high, big, strong trends up and down, or is it kind of a boring market, just kind of bouncing around, not really doing much? When it's really low like this, the market is not doing much. It's in a small little channel. It's kind of boring. Nothing's really happening. All right. But when you see these big peaks, right, that's when big news events comes out, like Trump with the tariff and other maybe interest rate announcements, what have you. So generally, what happens, you can see right now, some of the going back many, many, many years, these were the lows here. And if I scroll back a number of years, these will still be the lows. Right here, like 11.78, 11.64, sort of like the right in the 11s right here, and then move to 12.74, 12.7, and now we're at over here, we're 14. So 11 to 12 to 14, and we closed Friday at 15.7. So we're right near this lower range, is my point, okay? And if and when this moves back up, and we start getting some upward moves, we're going to see a lot of volatility. And whenever the VIX index goes up, the stock market generally goes down. It's pretty much a pattern that's existed for decades. And this is kind of what happens, right? The volatility index, okay, when that starts rising and going up, fear increases. It's a fear indicator in the market. So when fear rises, prices go down in the stock market and in the futures market. So right here, I kind of wrote this down for you. When volatility expectations rise, the indexes reverse, and sometimes they can reverse very fast, especially when the technicals already look weak. As we talked about, they look weak. So if the VIX here starts moving up, at that point in time, we want to be positioned for some pretty large moves down. I'm not saying that's going to happen, but I want to be positioned. If it does happen, we're on the right side. Okay. Um, Maybe it doesn't make sense because people think when you trade, you have to kind of know or predict what's going to happen in the future. You don't. We have no clue what's going to happen. But what we do know is the probabilities to the downside. All we do is position ourselves accordingly until the market tells us otherwise. And that's all we're doing as traders. You never want to try and predict or try and outguess the market because chances are you're not going to. All right, and then let me just wrap up here. We'll get into more of this in more detail as the weeks move on and during the daily trade tracker updates. But this is just a trade from Friday. I didn't want to go through. We normally have, I don't know, 5 or 6, 7 trades during the week. I don't want to go through and cherry pick and all that. I don't want you to think I was doing that. So I just went to the most recent day, which was Friday, okay? And it's very simple. We were obviously positioned to go short. So all we do as traders on the 1 minute chart is we just simply wait for our short signal. And this is automated. Like I said, I can get this to you. This is our Apex multiple time frame breakout strategy. And that white arrow right there was the signal to go short, okay? That happened at 8:30 a.m. Central Standard Time, just on Friday. It's 2 days ago. Right now it's Sunday. Right at the open, we had a sell signal, okay? What do we do immediately? We always put in a stop loss. The first thing we do is put in a stop loss in, okay? In this case, we put a 30-point stop loss in. I'll get into later why we choose that. Okay. And then once we have our stop loss in, then we have 4 different targets right away, correct? Because we don't know how far this market's going to go or even if it's going to go anywhere. So what we want to do is number one, position ourselves against loss. You always want to have a stop loss in and you never want to change it. You want it to be consistent And this is based on the volatility index. So the stop losses could adjust and change in the future depending on how wild the market gets. But to keep it real simple, what happens here? Okay, so you can see that yellow line, that circle there, we got stopped out, right? We hit our first contract here, and then we got stopped out. Turn around, we always re-enter price if and when it gets back to our entry point, which it did here. So we're always trying to make money as the market moves in our favor, right? As the market's going our direction, we want to pay ourselves. You don't want to hope and pray and wish and wonder what to do. You always want it. You always want to have your targets in place. So when the market so when the market goes our way, we want to start paying ourselves, right? So on our 1 minute chart, one of our strategies, we have a few targets here. We take some profits right away at 30, 45, and 60 points. Boom, boom, boom. Okay, we have some winners there. All right, and then we have what's called a runner or a trailing stop. And what we do is, in this case, we trailed our runner here by 45 points. What does that mean? As the market drops, of course, we don't know how far it's going to go. It could turn right here and go down another 400 points. We have no idea, right? Unless you try and guess, and we're not going to guess. So what we do is we just ride it all the way down until what? Until it turns around and it comes back 45 points. When that happens, we get out. No ifs, no ands or buts, no second guessing, nothing. This is set mechanically. So we always get out at 45 points when it whips against us. So here, okay, it came right down here to this low, that little wick right there, came back 45 points, and we got out right here at 25,596. Okay, so you can see if you add up all our points here, 135 points, right? Went short at 812. We got out at 782, 767, and 752. If you do the math there, 135 points. As you know, in the NASDAQ, each point on micros, we trade the micros, is $2. So 2 times 135 is 270. So that's a $270 profit right there. And then the runner, if you do the same math, right? We got in at 812, got out at 596. That's 216 points times 2 is 432. So if you take the 270 and the 432, add it up. So our profit there was 702. But you got to subtract out our loss here, right? We had a loss, 3 contracts, a 180. So you just do the easy math there, right? We made 702, subtract 180 from getting stopped out early on. So our net profit right there was 522. And that happened in 1 hour. 8:30 a.m. We got stopped out at 9:30 a.m. And that's it. So this is just one of our funded accounts. It happens that quick. That was one trade that day, 522 points in our account, and we're done. We could certainly monitor this the rest of the day if we wanted and wait for another sell signal. Why did we not take the buy signal? Because as we said, the highest probability trade is to the short side. So if you want to take the highest probability trade, you only want to be going short. We only had one short signal on Friday, and that's what we took, and that was it. And that's how it worked out. A little over $500 for about an hour. If you want to walk away and you're happy, fine, that's it. It might not sound like a lot of money to everybody, but I mean, this adds up. And these funded accounts, you can't get too crazy with them, right? There's some tight thresholds in there. You have to kind of, it's like you got to like needle and thread. You got to be very careful. So you got to just take a little profit and move on, right? If you just, take that profit and multiply it over the days and the weeks. I mean, obviously it's very good. You're not going to win every day like this, but the point is, I'm just illustrating you the way it's working, right? The market just opened here. Look at what's happening right now. See how it's dropping? It's a little after 5 o'clock Central Standard Time, 8 minutes. The market opens. See how it's dropping? It's because of everything we talked about, right? We want to position ourselves to the short side. So right now, these markets are open, 23 hours a day, 5 days a week. They open Sunday evening, 5 o'clock Central, and then they close Friday at 4 o'clock Central. They close just for 1 hour in between there. Basically, they're open 24 hours a day. I mean, 23 hours a day, but they close between 4 and 5 Central Time, is what I'm trying to say. So look at how the market's dropping there. And it's no surprise, right? Because we were talking about how everything is positioned to the short side. So that's how we want to position ourselves, right? We can have our stop loss up here. If we happen to get stopped out, that's fine because our rules in our system, we always re-enter back at our entry price. So let's assume we got stopped out there. If that was the case in the example, all right. Well, we're still re-entering the remaining all the positions going short. Okay, because what typically happens a lot is the market always likes to come back, have a little fake out, and then it goes the other way a pretty long distance. So we'll keep an eye on this. Like I said, right now I don't mean to be this to be confusing. Hopefully, I didn't lose anybody here, but I just want to show you a big picture how this works out. What we're going to be looking at, and it's very mechanical what we do. I'm going to invite you. There's no place to join yet, but after the first of the year, I'm going to have a link. You can join if you want. Follow us along. We're going to do this real time in the morning. I have real-time signals, a way to get them out to you, whether it be through text messaging or some type of live messenger service, so you can know what's going on in real time. And we'll start, moving along real time with this, so you can see how this actually plays out from day to day, week to week. But it's working very well. I've had the system built for a little over a year now, and yeah, back tested it multiple years, going back in old data, and it's very favorable. It's about a 60% win to loss ratio with the 1.5 risk to reward ratio, which is a positive equity curve. It's just math. It's just probabilities, and we're just putting ourselves on the right side. So I hope all is well, and we'll tune in again next week. Have a great week. Talk to you soon. Okay, thanks again. All right, bye bye.